How to turbocharge your donations on this edition of WealthWise. Hello, I'm Deanne Rosso, President and CEO of Elevate Wealth Advisory. Today, I'd like to introduce our founder, Chuck Vickery, who's going to give us some tips for turbocharging your donations in a way that impacts charities while reducing taxes. Take it away, Chuck.
Thanks, Deanne. Last month, Rob Fizikas gave us a wrap-up on things you should be paying attention to at the end of the year. And one of the things he mentioned was charitable giving. So today we're going to talk about philanthropy and charitable giving. And by supporting those organizations that you care about, you can touch, change, improve, impact, and provide for them. And giving actually may make you more prosperous. So wealth is comprised of three dimensions. Obviously the financial, how much money do you have? Just gives us more options, but there's also personal and social wealth. And personal wealth is your relationship with your family, your health. Social wealth is being with friends, having activities, things to keep you mentally and physically active. So if you could complete this statement, if I had more time and money, I would, what would you do? Well, it would probably involve one of these three, the financial, personal, or social wealth of your life. And we want to talk about those because there's only four things you can do with your wealth. You can spend it, you can transfer it to heirs, transfer it to a charity, or you can give it to the government or the IRS. Most people choose one, two, or three. They prefer not to transfer it to the IRS. So we get a tax deduction when we make gifts, and that tax deduction is important. But the reason that most people give is for altruistic reasons. The tax deduction is important, but it comes in second. So let's talk about gifting and ways that you can benefit from it. In this episode, we're not going to try to help you pick out who you want to support. We just want to talk about ways that you will benefit more through the support you give those causes and concerns and organizations and institutions that you care about. Prior to the Tax Cut and Jobs Act, which passed in 2017, the standard deduction that we had to hurdle so we could itemize was $6,000 for individuals and $12,000 for married couples. Well, the Tax Cut and Jobs Act dramatically increased that number while severely reducing things that we can itemize. So now the hurdle to itemize is $13,000 for individuals and $26,000 for couples. And if you're over 65, those numbers go to $14,000 and $29,000. So it's a much bigger hurdle than it used to be. So in light of the tax law change, we want to go over 4 charitable giving strategies, and hopefully one of these strategies will help you as we go forward. We have turbocharged donations, we have donor-advised funds, we have qualified charitable distributions, and proper estate planning. When you're deciding how much and to whom to contribute to, be sure to consider all your options. Yes, you can always give cash, but making non-cash contributions may reduce your taxes, increase your charitable contribution, and be a smarter way to make gifts. The first one of these strategies, turbocharged donations. Here we give away appreciated assets. That could be stocks, mutual funds, ETFs, real estate, whatever. The asset is transferred directly to the charity. The appreciation of the asset given escapes capital gains taxation for you, but you get the full deduction and full credit for the gift. When you make non-cash gifts, the deduction is limited to 30% of your gross income. If the gift is larger than 30%, you can carry forward the excess gift for the next 5 years. So let's talk about gifting appreciated assets. Someone that gives $10,000 of cash is giving $10,000 that has already been taxed. Just like when you go to the grocery store and you buy bread and milk, you pay for that with money that's already been taxed. If you give away $10,000 and your income is like $120,000, between state and federal taxes, you're paying 28 cents in tax. Now, is that $10,000 gift deductible? If you qualify, it is. And how much of it is deductible? $10,000. However, if you were to give away an asset that had maybe tripled in value, and that's not unusual, the cost would be 34 cents per dollar. So your $10,000 gift cost you $3,400, not $12,800. Is it deductible? Yes, if you qualify. How much of it? The whole $10,000 is deductible. So you avoided paying tax on the appreciation, you got an opportunity to write it off, and it cost you about $8,000 less to make a $10,000 gift. So when we're gifting appreciated assets, you receive credit for the current value of the gift, you avoid paying taxes on the appreciation, the charity sells the asset and pays no taxes, and you can replace or rebuy the asset you gave away with the cash you were going to give them. And now you have a stepped up basis which reduces your taxes in the future when you do sell. It's a win-win for you and the charity.